और market कैसा लग रहा है. A chapter called Geopolitics. Okay, they have
Okay.
introduced a small chapter.
Geopolitically, I don't think an era has existed as unstable as it has been over the last 5 years, okay, right after COVID. A sort of a constant fight and struggle with all the stakeholders that you called out. Because in some sense, it's a fairly unconventional path. 45% of assets of the mutual fund industry in India are actually out of Bombay.
Would you articulate the philosophy at Old Bridge? Like, what's your investment philosophy?
A newbie trying to figure your way around the markets. With all the foundation in place, you don't have a game plan in terms of how you want to implement that foundation.
A very good morning to Tarang and all the viewers. So, Tarang is managing the funds at Old Bridge Capital. And I was just going through the fact sheet, एक बार तुम्हारा age and all that देखने के लिए. So I went to the Old Bridge fact sheet. So I'm old for you, believe me. I still imagine that you are the same old, 25-year-old guy who was so inquisitive about ये free cash flow for the firm में जो investments होता है, ये कब होता है, कैसे होता है, ठीक है, and stuff like that.
So believe me, I think we didn't recognize it as much, but it's actually held me in good stead in my professional career. In fact, we were always sort of questioned by our peer set, by my folks also, कि तुम लोग इतना depth में क्यों घुसते हो, right? But I mean, I think the devil lies in details, and if you have this ability to, go through these details and understand things, I think it helps you and puts you in good stead.
Correct. So, Tarang, I think apart from the conversations that we used to have over phone, okay, because
Right.
that time I used to operate on a WhatsApp system जहाँ पे सारे के सारे students मेरे को WhatsApp पे doubts पूछते थे, ठीक है?
True.
Make me recollect because I don't think I have asked you ever. Did you join CFA with me first or CA final?
No, I actually joined CA Final, sir, and I think I don't know whether I formally told you ever. I mean, the reason why I sort of pivoted from CA towards CFA and then got into CFA and then eventually chose a career in the field that I'm in right now is essentially got to do with my tryst with what we used to call as strategic financial management in CA Final. And whatever I gathered in my final course under you.
So you joined with CA final SFM, okay, with
Right,
me.
right.
And the interest that you got through SFM,
Absolutely.
that got you to get started into CFA.
Absolutely. Actually, two things actually. My experience in my articleship, okay, coupled with the sort of interest that I garnered in financial management through SFM, those are the two reasons. Because what I did in articleship made me conclude that this is not something that I want to pursue for the rest of my life. And what I did during my time in SFM, and एक होता है, your interest peaks in certain things. And I think those are the two factors which eventually drove me to the fact that I want to take up a career which is perhaps a little more nuanced than what a typical CA would get onto. So I was pretty sure that I wouldn't want to get into audit, wouldn't want to get into tax, I wouldn't want to get into costing. So from a process of interest and from a process of elimination both, I think I got naturally steered towards CFA.
But how does that steering get to the extreme level where you drop CA altogether?
So, so I think the course, it's a fantastic course, the CA course, the manner in which it's structured. But I think there's a difference in my personality and difference in what the course had to offer. So to give you a sense, I've always been someone who's wanted to like to go in depth of things. Whereas the course, the manner in which it was structured, would want you to have a wide breadth and a wide coverage. uh, eventually with time, I realized that having coverage on certain aspects of course would not drive value for me. So I just said that, look, why don't I just pursue what I like or cherry pick the part of the course that I really like and then sort of double down onto it. Second, I think I don't know how the course has sort of transformed or pivoted itself now because I know that the institute has made a lot of changes in the course, in the manner in which the exam is conducted. But I guess at the time then I was doing it, it wasn't as conducive. I felt it was a lot more mechanical
It is still.
and oh, it still is. So, okay, so things haven't changed.
Hmm.
And I mean, the exam structure, I think we've all been fairly critical around it. So those were also the factors. So CFA helped me open up imagination. It helped me get into depth of things. And the exam structure also was a lot more objective in terms of grading and how would you go ahead with it.
So when somebody takes such a big decision of dropping CA at the final level, there
Right.
are other stakeholders,
Absolutely.
who are with you in the sense family and all, and there would be a discussion maybe or whatever. क्या कर रहे हो जब आई गए CA final तो कर ही लो. What is the issue? So didn't that thing happen? You were given complete autonomy regarding this important decision.
Not at all. In fact, it was an extremely difficult decision for me. And it has been a sort of a constant fight and struggle with all the stakeholders that you called out. Because in some sense, it's a fairly unconventional path, number one. Number two, at the time, CFA was always considered as a second fiddle to CA, even in mainstream finance. And for those reasons, people were not very convinced in terms of I wanting to take this path. Uh, but I guess beyond a point, if 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 you're sure enough about things, or more importantly, if you're stubborn about things, right? There's only little that other stakeholders can do because as you move forward, right?
Mhm.
I mean, if you're reasonably confident about what you want to do, eventually in the long run it plays out.
Correct.
And it musters a lot of courage to garner that confidence. So I guess I went through that journey and yeah, I mean, I
Yeah,
pivoted.
so to that extent, myself and you are on the same distinct path because I distinctly remember my CA final was due in May 99. Okay, May 99, my CA final was due. And I also filled up the form. Okay, and but I found that the subjects which are there in CA final were not related to the CFA stuff at all. And I had to separately study for the same. And I was teaching day in and day out at that time, you know, and I just decided that नहीं मेरे से audit और indirect tax बैठ के पढ़ा नहीं जाएगा. So I just quit it. So तुम्हारा difference ये है कि I think you never registered for CA final exam as such. But वो
Yes.
है कि if one goes into the statistical records, one would find that मेरा May 99 is the term I hope I remember. जहाँ पे मेरा register किया हुआ है, but I never sat for the exam. It's not appeared, not appeared, not appeared. But that way.
So मेरा भी वैसा ही है. So
Yeah.
register है
फिर
but
क्या हुआ
never
फिर
sat
क्या
for
हुआ
it.
रिसेंटली आई थॉट एक काम करते हैं CA फाइनल AFM जो है ना उसका पेपर हर बार दे के आएंगे. ठीक है एक्सपीरियंस के लिए. तो हर बार वो पेपर दे के आएंगे पता रहेगा एग्जाम में क्या आया क्या नहीं आया अच्छा रहेगा. बट द पॉइंट इज दैट इवन दो आई एम अ रजिस्टर्ड स्टूडेंट विद ICAI आई कैन नॉट अपीयर फॉर द पेपर बिकॉज उसके लिए वो सब देना पड़ता है ना MCS. वो
समझा.
या
There are prerequisites. There are
या 1 मंथ
prerequisites.
का ट्रेनिंग या 2 मंथ का ट्रेनिंग क्या करना पड़ता है.
Correct. Correct. Correct.
अगर वो लोग वेव ऑफ कर दे तो आई वुड हैव एक्सप्लॉइटेड दिस आर्बिट्राज अपॉर्चुनिटी ऑफ अपीयरिंग फॉर CA फाइनल अगेन एंड अगेन एवरी टाइम बिकॉज़ देयर इज नो स्टॉपेज यू कैन अपीयर.
Correct.
जैसे कैट
Correct.
लोग अपीयर करते हैं ना दैट वे.
Correct. Correct.
या
Correct. Absolutely.
uh
वो सर, it reminds me, आप जब पढ़ाते थे CA फाइनल में, there were two sets of answers, right, for some questions. One answer would be an answer which would be logically accurate, and the other answer was an answer given in the RTP.
या बट देन वी
So,
यूज्ड टू से दैट करके यही
uh,
आना है.
RTP karo.
Yeah,
RTP का आंसर डालो.
correct, correct.
So I think beyond a point, if that starts happening too much, right?
Hmm.
You tend to lose your confidence in wanting to pursue. So, I mean, there were a host of things, but
Hmm.
primarily, I think I realized that I wanted depth in certain aspects of the course.
Hmm.
And if I didn't have a gateway in the form of CFA, I would have probably not pivoted. So, CFA gave me the pivot that I wanted at the right time.
Correct. Plus, coming from Mumbai, the awareness and the inclination towards CFA and the decision that you are correct, okay, that becomes more convincing. I think
Um,
Mumbai makes a lot of difference.
I agree. Absolutely.
Correct.
I'll give you an anecdote, I mean, some data point. 45% of assets of the mutual fund industry
Hmm.
in India
Hmm.
are actually out of Bombay.
Hmm.
So that's the level of financial literacy that this city has,
Hmm.
and how mainstream this line of work that we do is versus, say, other aspects of the country.
Hmm. No, I got the same feeling when I go to so many colleges nowadays, and I just ask them how many of you are doing CA or CFA. So in Mumbai, NMM, I said I found that almost everybody is raising their hands that they are doing CFA. You
Correct.
know, so there's a different culture out there.
Right.
Even the CFA Institute data, if analyzed, if available, would show
Right.
that maybe 30, 35, 40% of the CFA aspirants may be from Mumbai.
Mm.
Wonderful. Okay. Now, coming out of CA, okay, let's drop CA now
Absolutely.
and into the other aspects. Like, I have seen sometimes people who are running their own funds, as in who are running a fund management or brokerage or sell side, buy side, everything, and they may be in their, say, late 50s or early 60s. I don't want to name them. Sometimes they are fixated about the fact that यार CA ही बढ़िया है, ठीक है? Uh, in that background, uh, take us through the story of how did you approach Old Bridge, as in Kenneth. Till that time, how many years they've already started managing funds, if at all? What age was yours? How did you get to sit on the interview table? And how did you crack the interview at such a young age? And also जैसे सभी जन विश करते हैं काश ऑर्गेनाइजेशन ऐसा हो जहां पे इफ आई एम केपेबल एंड एबल ओके देन आई गेट अ लीनियर ग्रोथ ओके मतलब दैट इज नॉट स्टॉप्ड मेरे को एकदम अलाउ करे परमिशन बेस्ड ऑन माई कैपेबिलिटी ठीक है एंड आई थिंक दैट हैज हैपेंड विथ यू
Absolutely.
how many years have you spent what is Kenneth's philosophy when I sometimes listen to him on the media I find that he is very, very clear in terms of his philosophy, his vision. So, what is Aldrin's philosophy? Okay, how have you been traversing the same? Okay, and things like that. I always remember the DuPont guy. You are the one who manifest DuPont because we have done so much of DuPont, but you are the one who said that sir, हम लोग DuPont actually use करते हैं. So, a host of questions getting into the style of Old Bridge, but starting from how did you get into Old Bridge? What age? Everything. Don't leave the details, please.
Right. So I think so I finished my CFA in August 2018.
Hmm.
And at the time, I think CFA was a second fiddle to CA in the world of finance. So for someone who's trying to crack interviews with a CFA with a lack of CA, is something which was not very well appreciated in the industry. Uh, so I really had to, I really had to press hard in terms of even having someone to have a conversation with me. Uh, Conventional methods of dropping in your CV electronically and cold calling the folks on the buy side or the sell side wouldn't have helped. Besides, for what reason or rationale, I don't know, but I was reasonably confident that I wanted to get onto the buy side and not on the sell side. And if it meant that I had to make some compromises to begin with, I was more than happy to do it because I always thought of myself as a money manager rather than someone who's suggesting stocks. Uh, so yeah, it was fairly difficult. A lot of cold calling, a lot of emails didn't work. Eventually, I think what I realized early on is that your CV is something that everyone gets. How do you differentiate yourself in the marketplace? How do you really establish your commitment to what you're trying to do? And for those reasons, I said that, look, I have these capabilities that I've created through my professional education. Let's put them to work and demonstrate what I really get onto the table when I'm coming to you for a job. So, what I said was, I will create a research report on my own. So, what the sell side now calls as initiating coverage reports, which I didn't know existed at the time, I created my own reports. I went with 100-pager report on a company, number one. Number two, I went with that report and my CV physically at my firm's office. So I was, in fact, when it came to Old Bridge, I was categorically told that they're not hiring. But I said, I really want to work here. So why don't I, really put in my CV with my report and see if something comes out of it? So I think that worked in my favor. I wasn't very young. I was actually approaching 28 by the time. And even my first interactions with the firm, while the firm was extremely receptive, when I came in with the initiative that I did, I think it took time for them to also come on board. And I mean, the usual feedback, right? We like you, but we don't have any openings. But I think somehow something clicked, an opening came, and 2 months later, my head of research then sort of called me, and he said that, why don't you come along for a conversation? So I think my interview happened somewhere in October 18. I got a call somewhere in end December 18. And January 1st, 2019, I was told to report to work at 8 o'clock in the morning. So I joined in as a management trainee
Hmm.
with a conversion committed if everything goes well at the end of a 6-month tenure. And thankfully, I was able to convert and moved from being a management trainee to an associate analyst. Started off with one sector. Eventually,
Which
uh,
sector?
I started my first sector that was accorded to me was telecommunications.
Hmm.
So I started with telecom, which is Bharti, because Bharti at the time was right at the center of what we do at Old Bridge,
Hmm.
right? A difficult industry cycle, reasonable consolidation in the offing, a strong executor. So it was right there. And then I sort of straddled through multiple other sectors, pharmaceuticals, chemicals, commodities. Spent about 3.5 years, I would say actually 4 years, being an analyst. And then eventually, when the firm decided to launch the mutual fund, I was lucky enough to be considered for the role of a fund manager, and we launched a mutual fund in Jan 24.
Hmm.
And I mean, all credit to my seniors at the firm. For it's one thing for someone to have the capability; it's the other thing for the folks up to be able to recognize because it doesn't come so easily. Even for the senior management, they're sticking their neck out for you. And in that sense, I think I don't think my journey would have been possible anywhere had it not been for Old Bridge. So yes. So Jan 24, we launched our flagship fund, and that's a fund that I jointly run with Kenneth.
What is the AUM right now?
We're today, as a house, we're managing about 12,000 crores.
Hmm.
Within that, the mutual fund is close to about 2,500 crores.
Okay. And would you articulate the philosophy at Old Bridge? Like, what's your investment philosophy? And
So yeah,
does it actually imbibe with you? Is it natural to you also? Okay. How do you relate to it?
So I think this was one of the key points that got sort of addressed being at Oldbridge. See, I'll tell you what happens when you are a newbie trying to figure your way around the markets. Okay, there are two shortcomings that you have. One, with all the foundation in place, you don't have a game plan in terms of how you want to implement that foundation, right? How you want to implement the skills, number one. Number two, even if you have a game plan or a method, you don't know if it's going to work, right? And for those reasons, a lot of times without a framework, you tend to keep running around headless chickens, right? I think in my case with Old Bridge, that worked beautifully for me because our methodology, or so to say, our method to the madness, is something that my founder has been crafting in his own way for the last 3.5 decades when I joined him. And in some sense, I was able to, improvise on his experiences, and that helped in a great way because not only did you know that there is a method, but with time, you also realize that this method works. And for those reasons, I think I've been able to internalize it, number one. Number two, I think it resonates with me very naturally. Uh, as a process, we're long-term investors. So to come back, 2016 is when the fund started. But Kenneth's been in the money management business for 3 decades prior, and he was the CIO of IDFC Asset Management before that. And 2016 is when the fund started. 2019 is when I joined in, and we're essentially looking at buying capital efficiency at a price. Okay. So typically looking at great businesses, which are probably going through a difficult industry cycle. But the reason why we call these businesses great is because the track record of execution has been extremely strong and they've demonstrated a certain element of capital efficiency. So our perspective is that, look, when an industry is going through a churn, it's difficult for anyone to make money. But the question is, you have to consolidate at the time. And when eventually the industry reverses itself, uh, the person who's demonstrated the maximum amount of fortitude ends up coming with a larger market share. And in this entire cycle, there is a huge element of derating and re-rating that the business undergoes when it comes to the stock market parlance. So that's essentially how we do uh, about picking stocks. And frankly, it's one thing to say it. It's extremely counterintuitive because when you are deploying your capital in a business, uh, you always want things to be on the upper end. Okay, so if today I'm deploying money in a company, and as long as the earnings are growing, there is always an element of positive momentum with the business. But to deploy capital in a company where potentially for 6 months, 8 months, or even a year, year and a half out, you're going to potentially see earnings, being stable or declining. It's quite gut wrenching, and at the same time, it requires a lot of patience. Uh, but the good part is I've seen both the sides. I've seen the side of that gut wrenching feeling, and at the same time, I've seen it turn and reap the benefits out of it. So I'm completely internalized with the philosophy.
So we say that ultimately what matters is revenue, margins, and multiple.
Right.
Ultimately, when actually things work out, the revenue growth rate shows up, the margin shows up, and the multiple re-rates, as you said.
Correct.
Yeah, it's just that investors who are invested with the fund, I think it's very important for investors to study the philosophy of the fund so that they
Absolutely.
don't take like short-term decisions about the fact that, look, in this quarter the fund has underperformed the benchmark by this much. Okay, because then that loses the entire philosophy itself.
In fact, sir, I mean, this is one of the key messages that we go about when we interact with our investors and with our channel partners, that don't focus on returns because It's a track record that we've established, which means that it is something that we've done over and over again through
Mm,
cycles.
mm,
But for you to be really committed to the fund, you really need to internalize the philosophy or understand the philosophy,
mm,
and repose your trust that there is a certain method to this madness,
mm.
and maybe not 10 out of 10, but 9 out of 10 times, you wouldn't be disappointed. You'll be very happy being invested with us. But the thing is, in CFA, we used to learn that time horizon is your biggest risk mitigator,
Mm,
right?
mm.
And in that sense, that's a impediment that we're trying to address. That you know, buying into businesses is about investing in the long term. It's not about playing the short term momentum. You could perform one year, you wouldn't perform the other year. But importance is to focus on the process and not on the returns. I think returns is an outcome of the process. So the question is, are you with the process? And we feel at Old Bridge, I think we have a very strong process. And more importantly, it's a process that we've tried, tested, honed, sharpened, and improvised over time.
Perfect. So when you have such, uh, let's call it black swan events, like the one which going on right now, okay, US, Israel, Iran, uh, I think you all must be mentally positioned to see whether you all can spot better pricing into great companies, okay, which otherwise you were not getting. Am I
Right.
articulating it in the correct manner?
Absolutely. Absolutely.
Mm,
I mean, it's events like these which present opportunities, right?
mm, mm,
Because idea is not to buy a cheap stock. Idea is to buy a great business at a reasonable price, or if you're lucky enough, at a cheap price.
mm,
And yes, events like these do present opportunities.
mm. So right now in the CFA curriculum, we have a chapter called Geopolitics. Okay, they've
Okay.
introduced a small chapter. And in that chapter, they are defining that there are three types of geopolitical risk: event risk, where the date is known, but the impact is a little bit unknown, say elections and all; exogenous risk, like a black swan; and then thematic risk, climate and cyber. So they have clearly said that people like Old Bridge, I'm just taking the name, would be least concerned about the exogenous risk, except the fact that they would see whether the pricing becomes very favorable and more focused on the thematic risks, okay, the one that are evolving in the long term.
Absolutely. I think we face risks I mean, last 5 years of money management, I feel, have been fairly dynamic in the sense that geopolitically, I don't think an era has existed as unstable as it has been over the last 5 years, okay, right after COVID.
Mm,
You've had singular or maybe a couple of instances playing out in the 5 year, 10 year periods before, but I feel last 5 years there've been quite a few so-called exogenous risks. I think from our vantage, whenever some of these arise, right, we always go back to the drawing board and focus on the fundamentals of the business, right? So as long as the fundamentals of the business are not impacted in a significant way, or it does not put our investment thesis into a disarray, we probably continue holding on to the business. But yes, if events like these impact our investment thesis, then we take the decisions that we have to.
perfect. I know that there's a certain I would say fragrance of conservatism that I get when I listen to Old Bridge. Um, Given that conservatism, you guys must be generally avoiding companies with a lot of financial leverage.
Yes. Yes. So I think margin of safety is the first thing that we look at, and
Mm,
I think that's something that we actually lent from our name, the name Old Bridge,
mm,
because I'll give you the background behind it.
mm,
in earlier Roman times, anyone who was responsible for constructing a bridge
Hmm.
was actually made to stand below the bridge
Hmm.
before the scaffoldings came off.
Oh.
Okay.
Hmm.
So, knowing fully well that their lives are going to be at stake, they would ensure that the load bearing capacity of the bridge is
Hmm.
far more than the actual load that is expected to traverse, and
Hmm.
thereby creating a margin of safety. So, that's where the term old bridge comes from.
Hmm. And
Uh,
how do you people stand under the old bridge?
I mean, from our vantage, a substantial part of our net worth is invested with the fund.
Okay.
Substantial part.
Correct.
In some cases, 100%, in some cases, 70 to 80%.
Hmm.
So completely aligned with the goals of the firm.
Hmm.
Uh, to your question, so what was your question?
No, the same thing. I was talking about financial leverage.
So financial leverage, I think, is something that we generally avoid. But again, it's nothing cast in stone, or there is no, so to say, a fixed metric that we work with. It's a function of the industry that we are looking at. So, in an industry, say like a commodities, which is the steel and the aluminum businesses, leverage is an essential part of the business. And going back to DuPont, right?
Hmm.
Leverage can be a significant value creator for an equity shareholder. The
Hmm.
question is how, because it brings an element of financial risk. So that's something that we sort of shy away from. So we are okay with leverage, but we're not okay with risk or significant financial risk into our portfolio holdings. I think that's a part of our risk mitigation strategy. So we want to buy businesses where there's a margin of safety established. We want to buy
Hmm.
businesses where financial leverage is under control. And that's why those are the fundamentals that we focus on rather than the volatility that gets entwined into the portfolio due to exogenous events.
So recently, I was having a conversation with Naveen Baid. Okay, he is a fund manager in Nuvama, and he said that they were evaluating a particular company, and they did everything, online meetings, this and that, and they were fine. They invested. The first time they met the company, maybe after 6 months or 9 months of investing, and there he found that there was a difference in the online, whatever was presented versus offline in your meeting. And when they were leaving, that time the promoter said, और market कैसा लग रहा है? Or, I don't remember the tone. Well, sir, the moment he said that, which means he wanted to ask as kaha invest kare, okay, is what he meant. Well, but the entire confidence of mine just got shaken. Okay, the entire, because what was there in the online versus the offline. So I know you were also scheduled to be a part of that particular
Yes. Yes,
webinar.
I wanted to. I really wanted to.
Yeah, when we
Yes.
were traveling to Jodhpur.
Yes.
Yeah. Uh, so, do you confront such situations wherein
Absolutely.
online versus offline creates a massive difference?
I mean, in some instances, yes, we do. And these are the finer nuances of what we do as investment professionals, which are intangible, so to say.
Hmm.
So these do come into our prism of evaluating the business, the longevity of the business, and is definitely a factor that we consider.
Okay. Right now, you are on the other side of the table. So, of course, I do know that in this entire buy side industry, the number of heads we require is less only, but still, when you are actually interviewing somebody or thinking about interviewing somebody, how do you go about? Because my larger question is those people who are right now doing the CFA program or who are very much interested and passionate about the buy side, how would you advise them from your lens that I'm sitting on the other side of the table और मैं ये सोच रहा हूँ कि काश मेरे को ऐसा बंदा या बंदी मिलती, ओके, जिसमें मेरे को ये दिखता. So how would you define that वे?
So can't generalize it for the buy side as a whole, but I'll give you our perspective of how we look at things. I think the first thing that I've realized being on this other side and working with a team of fairly young and talented analysts is that in the initial formative years of the analyst, there's a lot more investment that's going from the firm or the platform versus what's coming out of the analyst. Today, when I'm doing my work, it's extremely, I have to really, allocate additional time from my normal day to ensure that the analyst is coming up to speed in the way and form that we want. And that's why it's a very critical decision for us because what happens is there is a certain vintage that we expect the analyst to straddle through, after which the analyst starts contributing to the firm meaningfully. And during that vintage, the firm is investing heavily into the analyst. And if our decision at the time of hiring goes off, then there is a certain element of debt weight that sort of tags along,
Hmm.
right? So I think what we look at is a couple of things, right? There are tangibles and there are intangibles. Okay. So tangibles is essentially your CV. Uh, what is the foundation? What is your background? How active have you been over and above the CA, CFA? The entire trajectory. What were you in school? What were you in college? Because they may not directly speak of you as a financial analyst, but they do speak of you as an individual, as how you can allocate and attribute different facets of your personality to the firm. The second part is intangibles, which I feel are very critical and implicit to being a equity research analyst. I mean, do you have the natural element to do what it takes? Okay, are you do you really want to enjoy the process? Because finally, money making is the end goal. But do you really enjoy it, or it's really for the end goal? Uh, and Third, what kind of initiative have you taken in your life before coming to us to sort of bridge that gap between the tangibles and intangibles, right? If you're able to demonstrate some element of initiative, okay, and we're able to ascribe that these tangibles are present and intangibles are present, then you become a serious candidate for us to go along with. And that's how we do. But the point is, there's a huge skill gap that I think is going to be a part of what the analyst stack is trying to address today. Uh, it's that bridge that I just spoke of, right? Between the tangibles and intangibles. The CA and the CFA and any other formal courses of finance lay out a very good foundation, but that foundation is not good enough uh, for me to be able to readily utilize the resource. Okay,
Hmm.
and that bridge is important. The vintage that I spoke of,
Hmm.
uh, in our case, it could be 2.5, 3 years,
Hmm.
and which is sizably long
Yeah.
for two reasons. One, because when you have a person who's coming in with a certain foundation, that's great, but how do you implement those foundation, right? In industry analysis, in stock analysis. Second, how are you able to then marry that with our investment philosophy,
Hmm.
right? Obviously, the latter part will be independent and will be specific to each firm and the investment philosophy of each firm.
Hmm.
But the former part is also a big sort of a skill gap that remains to be addressed even today. And for demand generators like us,
Hmm.
we feel that if this gap is sort of plugged or addressed in a certain way,
Hmm.
I think it can be quite value accretive.
Correct. Yeah, yeah. So that is the whole reason of us launching Analyst Stack. And, the idea came from there only by speaking to people like you. And I'm so looking forward to the fact that you have certain sessions in the Analyst Stack program, okay,
Correct.
where you will try to just imagine that अगर ये जो मैं एकदम डीपली समझा हूँ, if I can explain this to freshers and they can just internalize the same, they could be of such a great value to creating the so-called alpha to investors who put their faith into the same.
Absolutely. Absolutely. Absolutely.
So, how would you manage Saturday, Sunday? How's your lifestyle?
Sir, it's about prioritizing. So, I mean, time nikal jata hai. I mean, if it is in a matter of your list of priorities, you figure
Hmm.
out. In my case, I've been fortunate to have a daughter.
Hmm.
She's about 5.5 months old right now.
Hmm.
So, whatever time that I don't get to spend with her
Hmm.
during the week, I sort of try to make up for it
Hmm.
over the weekend.
Hmm.
And also, it's a new experience for us both, me and my wife, as parents.
Hmm.
So, we're climbing the ropes, learning the tricks of the trade. So right now, that's the transition that I'm going through.
I think you had a love marriage.
Yes, sir.
See, there's so many things which are common between me and you. Wonderful. Uh, Great. See, I would have ideally wanted to have, sitting closely by on a sofa and having this thing because then stuff comes out better. Okay.
Right.
Still, we have to manage whatever technology can offer.
Correct. Absolutely.
Yeah.
So I'll give you. So you spoke about DuPont, right? And my tries with DuPont. Okay.
yeah. Mm,
You know, on the face of it, when you're doing finance or you're learning finance, the foundations,
mm,
it's a pretty simple math, right? Asset turnover into margin into leverage.
mm,
Okay.
mm,
But when you start implementing it into real work life, you actually, that single ratio can tell you who's creating value for the business.
mm,
Is it really the CFO? Is it really the supply chain? Or is it really the R&D?
mm,
Right? Uh, there is a there is a notion that high margin businesses are great and low margin businesses are not as good.
mm,
But I beg to differ, right? Because if you've got a low margin business, but he's able to deploy his capital much more effectively and he's able to structure his capital much more effectively,
mm,
it can be a source of great value creation. In fact, low margins is actually great because it avoids competition.
mm,
It whereas high margin will always be susceptible and vulnerable to competition, right?
mm.
So there are these host of things. That's one single paradigm
You
that
were
I've
saying
actually
that
used.
you were saying that if you go numbers wise, a 5% margin multiplied by, say, a 1.5 times turnover multiplied by a 1.5 times leverage.
Correct.
Okay, or better
Right.
still, of course, one can optimize the numbers
Right.
that way.
Right.
Yeah.
Absolutely.
Mm,
Absolutely. So, I mean, in some businesses, like, so for instance, if you look at commodities as a business, right,
mm,
you will always see that the asset turnover of that business will be low.
mm,
Okay.
mm,
Margins of the business are extremely volatile. Because depending on where you are in the value chain,
mm,
you would have limited control on your input and or your output.
mm,
Uh, and for those reasons, to optimize, leverage becomes critical,
mm,
right?
mm,
But at the same time, what percentage of your margin is out of control? Because essentially, if you've got a extremely volatile business, you can't then combine it with significant. You can't have operational and financial leverage
mm,
in a business in a big way.
mm,
But it really helps to put things into context,
mm,
right? So, for instance, if you look at a DMart today, okay,
mm,
a business with say a 15% gross margin and about 9% EBITDA margin,
mm,
okay, but you look at the asset turns of that business,
mm,
okay, so your ability to really harness the efficiency of the capital is is what is driving the return metrics on the other side. The
mm,
fact that you're able to provide that kind of value at the margins at which you are means that the ability for someone else to enter into that marketplace is pretty
mm.
inhibited, right?
Hmm.
So you, but that's why supply. So this is a business where supply chain, costs are factors which are essentially creating value more than the other aspects of the business. Whereas as I
Negative working capital.
negative working capital,
Hmm.
not negative, but significant. I mean, it's not negative because inventory turns are still there. It's an
Hmm.
essential element of the business.
Hmm.
But whereas in a commodities play, you would have some other facets of the business which are equally important.
Hmm.
So as I called out, right, it really helps you internalize what aspect of the business. So a trading business can be a great business, right? Just because you make 2% margin or 3% margin does not mean that it's an inferior business. It could be a crazy business because if you're able to couple it up with, say, asset turns of, say, 4x or 5x,
Hmm.
okay, you can actually, and couple it up with a reasonable leverage, you could actually make a lot of money.
Hmm.
And now with my, this is something that I learned in finance, tried to apply it on my own. And then when I actually see it happening in the real world,
Hmm.
uh, you know, you understand that there is a basis for all these things
Hmm.
to come into formal finance.
Hmm. It's true. I have seen it all throughout that everything that we study as a part of the CFA curriculum, many a times at that time, since we are not a part of the industry, we are not able to look at the application of it. But once
Absolutely.
you actually get into it, you find that yeah, हर चीज applicable है 100%.
Absolutely. Absolutely. So, many actually, I was just thinking about an analogy that I would actually use.
Hmm.
Uh, so it's pretty simple, right? For you to learn swimming, learning swimming is essentially the foundation that a CA or a CFA gives you, right? But
Hmm.
just because you've learned swimming, you can't go in Arabian Sea and start swimming,
Hmm.
right? You will need some floaters.
Hmm.
And I think those floaters are essentially the gaps that exist in the marketplace today.
Hmm.
And in some sense, these floaters can be great enablers for a person who's a newly learned swimmer to be able to swim the sea. Because when you are getting into a formal world of finance, you're not in your pond, you're in a sea,
Hmm.
right? And that's essentially where I think, these facets exist. How
Hmm.
do you apply these facets in real work time? And then eventually, when you get into your formal role, you actually start applying them.
Okay, perfect. Good analogy. I'll use it in the classroom. Yeah. Chalo. All my blessings to your wonderful, sweet daughter. Okay.
Thank you, sir. Thank you,
On
sir.
her turning 6 months. And
Yes, sir.
I 100% look forward to interacting with you, physically rather than on a digital mode. Okay.
Done, sir.
Yeah.
Done.
And I'm 100% sure that when we do interact and we have some time on our table
Yes.
of that day, we
Yes.
will definitely enter into some academic oriented discussion, okay, of something or the other.
Absolutely, sir. Sir, I mean, so me and Rishabh, I think uh, we've had a very good influence on each of us
Hmm.
because we've been born and brought up together in a lot of ways.
Hmm.
And, you know, we've in turn been influenced in a seismic way by you
Hmm.
because uh, we didn't have a lot of options when, because at the time, 10, 12 years back, finance was not being taught in the manner in which you were teaching it or
Hmm.
you continue to teach. I don't know how the industry has moved now.
Hmm.
Okay. Um, and I feel that had a pivotal role in laying my foundation to the trajectory that, I've played out. And that's why, I mean, SSEI and you are of such indelible importance to us.
I remember that hotel room, that hotel lobby, and
Yes.
the single doubt that you two guys had is that, sir, जो डेट 3 साल बाद 4 साल बाद लेंगे फॉर द पर्पस ऑफ कैपिटल इन्वेस्टमेंट
Uh,
फ्री कैश फ्लो में कैसे कैप्चर्ड हो रहा है एंड यू आर नॉट रेडी टू लीव द टॉपिक दैट वाज वंडरफुल
yeah.
या
So through this course, essentially, one of the things that you've always asked me, why do you want to be a part of this course? right? And I think if we are able to, you know, help in the smallest possible ways, in the way that help was accorded to us, right?
Hmm.
Um, I think it'll be very self-fulfilling more than anything else,
Correct, correct. It would
right?
be 100%.
राइट सो बिकॉज इट्स वेरी सिंपल राइट हम लोग को तो स्विमिंग सिखाया ठीक है अब हम लोग लोगों को फ्लोटर्स सिखा रहे हैं आप लोग के
Hmm.
टाइम पे तो स्विमिंग भी नहीं सिखाते थे वो
Hmm.
भी आप लोग सेल्फ लर्न किए हो
Hmm.
ठीक है तो देन यू प्लेड अ रोल इन टीचिंग अस हाउ टू स्विम we'll probably play some role in you know helping people implement the enablers so yeah
Correct. Wonderful. Chalo, enjoy that ceremony that you have tomorrow.
yes sir
Okay.
yes sir
Yeah.
thank you sir
Yeah. Well love to your daughter. Okay.
thank you sir
Yeah. Bye bye.
okay bye sir
Bye.